There is a particular tax where you might be taxed for somebody else's income. My name is Paul Vasquez with Tax Lab. We help people become ethical millionaires. So, in this particular case, somebody else can have income, and because of their relationship to you, you might be held accountable to the taxes. Now, we've talked about these individuals before, and they are your children. Your children under the age of 19, if they're still in the household, and under the age of 24, if they're full-time student in college or secondary education. If you are a business owner, you may get around by getting a deduction for paying your children under the age of 18 and under, to work for you. And so let's say you pay them X number of dollars every year, and they don't have to pay Social Security and Medicare. And then if they're under those thresholds we talked about before on their earned income, they're not going to have to necessarily file for the federal or even maybe the state tax, depending on how much you're paying them for the work they're doing for your family-owned business. So what happens if they begin to invest that money? So if they begin to invest that money, they may be held accountable to the what they call the kiddie tax. And so the first $13.50 is not going to be taxed. So they get the first $13.50 of unearned income tax-free. The next $13.50 will be at the child's tax rate. And then so that's going to be a total, if they earn a total of $2,700. Now, a portion or half of that is going to be taxed at whatever tax rate they might have, which could be still zero, but that's if they have more than that, if they have unearned income and earned income, and it turns out that they're going to have to pay taxes on that, it's going to be at their tax rate, whatever that might be. Anything in excess of that, so above that, is going to be taxed at your tax rate if they're a dependent, right, under the age of 19 and still living with you, you're still taking care of them, or up to 24 if they're in school. So hopefully you've got a little bit of help. You've given a little bit of help for them as they grow and learn, and hopefully this is a problem that you have to worry about, right? Wouldn't that be great? This is a good problem to have to worry about, is whether or not the unearned income of your children is going to be taxed if it's in their name. The great thing about this, right, is now you've got $2,700 of possible income that this child could be earning, and maybe the only reason it's there is because of you, right? Could be that family members contributed to that initial purchases of investment, and then they're entitled to the proceeds of that. If that is the case, then it's a good problem to have to worry about. But if it's over $2,700, there's going to have to be something reported on that, or considered about being reported. And once you get over that $2,700, you're definitely going to want to pay attention to the kiddie tax, because you could be taxed for the income that they are responsible for, or that is in their name. But it's a planning opportunity as well, if you think about it, because their tax rate on that first $2,700 is going to be more favorable than maybe yours on that amount. So there's some tax planning things to think about here, some family planning things to think about that may or may not be good for your situation. If you want help creating the right plan for you and your family, go to lab.tax, click on Advisory Services, and schedule your free 15-minute introductory consult or introduction. And we'll see if these plans might be a good fit for you. I wish you all the success.